This is Dan Max, the trading agent. This is a stock trading and recap channel that I wanted to share to the masses. In a probability game, there's no certainty. Here are my insights and predictions.
Good morning, everybody. This is Dan Max at eXp Realty, aka the trading agent, with another Back to Basics series. Today, we're going to focus on how to enter and exit trades, layering in, layering out, how it applies to stock and options. So let's get this party started. Example, we talked about GDX at 31 last week. We said we had references to buy it at the 31 level, support equals resistance. We started adding more shares on this move, and it looks good. Well, how would you have entered this trade, and how did you enter this trade? Well, initially I entered it here because it was verified support. The first bottom is always going to be harder to identify than the second bottom, as well as the first top versus the second top. That seems very obvious, but how do you trade such, and what probabilities do you use to make sure that you don't blow yourself out and get caught and lose big money, or sell way too early and just have major regret? So what I would do, and what I was doing here, is I started adding back. Now again, I did not go all in. I'm not an all or nothing trader. So if I start in here, for example, I did 50%. I like the way it held. Did I chase up here? No. I hit the 50-day and it backed off. I wanted to see how it acted on the 20-day, and then once it did, I saw this day, and you know what? I got trapped. I added more. I added another quarter. So I was 75% in. But I set a dollar stop. So $30, I was gone. Well, guess what? It knocked me out. Oh, damn. Well, when it started bouncing back, I started thinking in my mind, well, maybe this is the bottom. And if it is going to be the bottom, we can start back adding. Even though the volume wasn't necessarily great, we had this reference. Anything back over this is considered a bear trap. Everybody who sold down here was wrong. So again, started adding back, didn't chase it. We retested. I had a lot of folks asking me about this, and I'm like, you have to buy here. You have to buy here. Well, guess what? I added back. Now I'm in 75% of the trade. Great entry. I like it here. The action's been fine. Now my stop is my entry. Now this is what's great, is I really can't lose on this trade. I have good discipline in entry position where now I can set my stop at my entry and let it run. If you wanted to do this with options, these are, you have to think of it through the lens of implied volatility. Implied volatility expands when the moves are greater, bigger moves during the day. At bottoms and in tops, you usually have big screaming candles that blow out the implied volatility. So if you have a first bottom, say for example with this W pattern in US steel, you could have sold puts here. They came back up, and then it all came all the way back down. But if you sold at the money or out of the money, those puts are worthless. Now you collected all that premium, and you could buy calls. You buy the calls with the lower implied volatility, the compression that's going on here. Now you've basically paid for free calls. Again, we're not always worried about how much we make. We're worried about how much we can lose. Now you have a good cost basis to buy calls. The stock starts rising. You're good to go. It's the same thing with tops as well. Not that I'm calling necessarily the top in Tesla, because I think it could get to the 2x range. But this is what a blow-off move looks like. You need to be selling options. You need to be layering out. Now, again, what percentage do you feel like you need to sell or buy at the bottoms? It's all relative. If you think that this is the bottom, you should be a little more aggressive. If you think this is the top, you should sell a little more. You should have in your brain a plan and a numbers that game where you go, you know what, if I make a ton of money, I don't want to give it back. It's like playing blackjack and knowing you've had a massive heater. You have to put some of those chips in your pocket and lower your bets down. So if you were trying to pick, the top in Tesla, selling calls here would have paid you premiums, huge premiums with the high implied volatilities. If you started taking a little bit of the shares off, you're loving it. Because then if Elon does say something like he did over the weekend where he asked everybody, should I sell 10% of my shares? And it pulls back, you could buy some here. If you sold 30% of your shares on this up move and you wanted to buy a little bit back, you could here. Now again, tops are usually choppy. V's aren't the name of the game. It's M's and W's are typically the situations you look at, or choppiness. So bottom line, you keep it simple. In a probability game, we don't know for sure anything. So we have to use those assumptions to say, I've made great money if I bought Tesla. I need to take profit off. Do I need to sell all of it? No, because we don't know where it's going to top. But if it keeps rising, you sell a little bit because the odds of a pullback grow the more you go higher. The same thing, for example, with the GDX at the lows. The bigger the move down, at some point there is going to be a big reverberation up. So if you were short this or waiting to buy, you look for these extremes. You look for the extremes maybe at verified support to start entering in. And again, all or nothing trading is the death of the retail trader, because what's going to ultimately happen is they're going to blow up. They're going to make a mistake. I make mistakes. Everybody makes mistakes because sometimes the market reacts to things that we can't predict. I can't see the news. I can't predict the future news. I don't know for certain anything. So I have to think in my brain, what are the best ways to minimize my losses? Well, on the first bottom, partially buying in and having a tight stop means if I'm wrong, I lose less than I would have if I would have gone all in. And then if the stocks verify your entry as correct, then you can add and use your entry as your stop if you're correct. So if you would have bought at 31 here and it popped here and you added here, now you put in a tight stop because you know this spot has to hold. If this spot doesn't hold, fail and you're out. So you lose 1 or 2%. Well, it'd been great to buy the bottom if you could have, but what if you just waited for 31 again and you bought here and it pops up and you had 50% of your holdings? You're like, this is great, and you're wondering if it pulls back, I'll add. If it doesn't, I'll wait for some other pullback amongst the trend. Because again, just like a downtrend, same thing with uptrends, you're going to have verified pullbacks in the uptrend. Well, guess what? It pulls right back to 31. Last week, I am screaming to people, please take a look at this, have a plan. It gets back there. Now I'm fully invested. My stop is now my entry. I can't lose. That's how you live the long-term trading life. I can't lose because now I've bought in at prices that I think are near the lows, and my stops are my entry. My loss is time. I don't mind losing time, but losing money is a killer. So if you can think about trading through the probability lens and you don't have to chase, you're not a FOMO, hodl forever, those are all rookie plans. Those are the plans of the idiots who will not survive 1, 2, 3, 10 years of trading, because guess what? They will make one mistake that will blow them out. Everybody who trades will run into those circumstances. So how to layer in, knowing the probabilities of where you're at and how aggressive you should be entering and exiting. And again, keep this in mind with options. The first bottoms, if you're trying to buy long-term calls, is not when the IVs are the most jacked. The IVs are going to be very high as GDXs come slamming down. But you pop and retest, the IVs will compress. So if you sell options, because that's what the market maker is really trying to, how he collects, because he's selling options to the people who are buying them. So they want them premiums to be as little as possible. So keep all of this in mind. Probabilities, 50% maybe on your first entry, then you add another quarter, or you say a third, and a third. It really depends on where you're at in the trade. If you think this is a big move has happened and something is going to flip, then maybe you can be a little more aggressive at the bottom. But just remember, the first bottom is always going to be tough. There's always going to be an M at the top or some chop. There's going to be some sort of retesting, maybe flag. There's always situations where the bottoms and tops just aren't this one up, one down, V bottom, perfect V, tip of the sphere, bottom or top. It just doesn't work like that. So if you can think in your mind, well, I've seen that a bazillion times, I need to know in my brain that I can liquidate out or enter in partial amounts, knowing that I can come back in. And if I am wrong about selling here and it goes higher, great, you still own it. And if you're right, then you can use that and go, oh shit, well, a lower high or a retest and fail means I need to get more out. So you have to think like that. And Tesla's a great example. People were saying, well, you know what, you're trying to call the top. And I'm like, no, I'm not trying to call the top. I said there's topish potential in all these Fibonacci's. If you had not been selling any on this, you're going to get caught on a backfill at some point. Well, Elon says something over the weekend that doesn't really make sense to pertain to the stock other than asking people should he sell some of his shares. Well, now you could have bought that dip if you weren't 100% invested. If you're selling these straight line moves, the further they get, you know the odds of a reverberation backfill is coming. So keep all of this in mind. You're playing probabilities. If you own Tesla for the long run and you're always fully invested, you can't buy dips. So you want to look at the strength to sell into. That's what the market makers do. That's what this market was meant to be done. It's meant to be traded. Now again, if you're holding it forever and you think it's going to 5,000, then this video isn't for you. And if it gets to 5,000, great. And if it's back at 500, you're going to be pissed because you didn't really have a plan. Buy and hold is great for indexes. Individual stocks can be dangerous because when bull markets change, leadership changes. That's a whole nother video. But think about the probabilities of entering, because you can use the same kind of phenomenons on day trading. The same thing. If you think intraday, this area for Tesla at 1060 is a bottom, this is your first entry and it retests it, hold, great, you buy a little more. Oh wow, it came back to it again, you bought, now it starts rising. Well, guess what, you're trading. The higher it goes, the less you own. It's a day trade. You're trying to scalp out money. I hope this helps. Again, this is Dan Max at eXp Realty with the Back to Basics series. Layering in, layering out, how I use stops. Again, keep in mind, when I get into something, I want to lose the minimal amount. So if I get into something and it starts moving, I set my stop at my entry. If I get knocked out with no loss, that's okay. I'm preserving my capital. Think of your money as bullets to fire to shoot after the big game. I want people to start looking at this through the probability mindset. Once you can start doing that, things will change. So I hope this Back to Basics series, I will explain more of this kind of stuff and get into depth and everything. If you have questions or comments, please post them. I'll try to respond the best I can to give everybody the most insight I can from this stuff, because it is not simple. And if you think you can figure this out without experience, your emotions are going to cloud your judgment and you're going to fuck things up. It's just guaranteed. Well, I'll talk to you guys soon. I appreciate all of you.
Thanks for watching. Please subscribe if you like the content. Also smash the like button, share with your friends, and add a comment. If there's a topic or stock you'd like me to give you insight about, let me know in the comment section. I'll do my best to answer your question. Thanks.